Every day the stock market is open, and many times stories are ran on days the market is not open, saying why the market is either up or down. The truth is reporters are clueless and just look at whatever major story there is and assumes there is a strong correlation. There may be some reporters who finally figured out it's not ordinary investors moving the market, but in order to keep their overpaid jobs, they have to go with the flow, doing the public a disservice. Not only this, but the negligible amount the market would move based on the aggregate investors, with mostly non-existent communication among them which would rarely move the market more than 1% from their own doing, is totally ignored, and there is no mention of major firms such as Goldman Sachs or J.P. Morgan or the U.S. Treasury Department in collusion with the Federal Reserve deciding to move the market one way or the other. The rare times when investors do make big moves based on news reports may happen once every few years, such as the event of 9/11, the earthquake at Fukushima, the unexpected vote for Britain to leave the EU, otherwise known as Brexit, and possibly to a lesser extent, selling of equities for tax purposes, which may be seen in the closing days of the year. What these aforementioned events had in common is fear of something, in making a market fall. There normally is no impetus to suddenly draw in many investors, as there normally isn't anything to be so cheerful about when putting money into risk assets, and when prices go higher, the risk becomes even greater. Sure, there may be limited market moving happenings that are more or less expressed in single stocks, such as an IPO that is open to all investors. Sometimes an upward move in the market is helped out by the Federal Reserve in making a surprise interest rate cut or some other act to try to manipulate up an already overpriced stock market. But even these moves by the Federal Reserve, it's not like there are thousands or millions of people holding onto millions of dollars and saying they will buy up the market with all they've got based on a certain move of the Fed. That's just too outlandish. It's still the collusion with the media, U.S. Treasury Department, the major firms such as Goldman Sachs, J.P. Morgan and the Federal Reserve manipulating up the futures market and then carrying through until too much selling pressure makes them swing the opposite way, and then they decide whether or not to double down. End result is the middle class gets fleeced from all of this in their constant market fueling 401k accounts. The middle class serves as fodder, using those funds selectively to buy or sell to enable the big brokerage firms to gain on their backs. The 401k account holders are passive investors. They do not select a buying or selling price. They select whether or not they want to buy or sell and have to make the call in advance so that the brokerage firms know what to do the next day in either pumping up the market and selling to these 401k individuals at a relatively high price, or taking down the market so they can buy at a good price and making the 401k account holders sell at a relatively bad price. The middle class should be selling out completely from the market if they really want to help themselves, but I stand alone in showing what's going on with their participation in the markets. No one else shows that the middle class goes down as a result of this. Go see my video that goes in on this. Now, if the market ever becomes underpriced, surely investors would step in on their own and no action from the Federal Reserve would be warranted. The haters of humanity in power want the market overpriced as it widens the wealth divide, hurting both society and the economy. They do not care what harm is done. Hurting the economy does not mean the wealthiest will get hurt. On the contrary, with politicians in their pockets, they will keep getting wealthier and wealthier relative to the rest of the population. While many of you still like a few YouTubers to make their 5 to 10,000 per month more or less recycling the same themes, I still get nothing even though I am providing more than what they give in fresh information. I work for the people, these others work mainly for themselves. As mentioned in one or two of my other videos, I doubt anyone has written the Federal Reserve as much as I have, and of the SEC and many other government agencies in addressing stock market manipulation. I am now stating I doubt anyone has written the various financial news networks and given them a piece of their mind as I have been doing for the past 2 decades. You name them: CNN, CNBC, MSNBC, Fox, Bloomberg, Reuters, Yahoo, whatever. I've been after these stock pumping propagandists. And to think I deserve nothing? Well, I hope there is an afterlife where my efforts might be rewarded, as I'm not getting them here. Here's an example of a story CNN ran on August 29, 2019, with the title, "Stocks Rally on Hopes That Trade Tensions Will Ease." To make the narrative fit the market, the title often changes throughout the day. I laugh when the market reverses and the title has to be radically changed. At the end of the day the title got changed to "The Dow and the broader U.S. stock market rallied sharply Thursday, buoyed by hopes that trade tensions between the United States and China might ease." What is implied in the story is that investors are moving the market based on some dumb event. The event is just as poor to ascribe a big market move, such as when weekly jobless claims are low or when monthly job gains are barely above 170K, which is around the baseline of zero jobs growth on a real basis. Hey, don't expect overpaid reporters or highly compensated YouTubers to tell you this. I asked the news networks, how do you know? Did you make a survey in the early morning, like 3 a.m. New York time, asking 1,000 investors what they are going to do? Of course not. It's a bunch of tail wagging the dog stock pumping propaganda, and hardly anyone is barking back about it. The public assumes whatever is being told is the truth. And why not? They see the stock market up big or down big, and then they see a news story, and then there's the aha moment. But to what extent could all the individual investors really be involved in the big moves? Usually very little. Just how does anyone at CNN know this? Do they conduct a survey of 1,000 people across this country each day to find out if they are buying or selling based on some particular news event? No. It's conjectures stated as facts, and that's the way it's going to continue, until which time thousands of persons do as I do in angrily giving feedback to the media companies to stop their incessant propaganda. Lastly, look at what occurs when the stock market isn't being moved in a big way. You know the individual investors are involved, but this is on Columbus Day, Monday, October 14, 2019. When apparently the big players took a day off. Look how little the market moved, the jagged ups and downs and no real big movement. This is how the market would normally behave without all the egregious manipulation. You won't find a media news story of major stock firms closed, so little manipulation today in the markets.